Good day, traders. This week we will be looking at potential reversals on the USD to the South African Rand, as well as a potential reversal on the Euro USD, along with our usual lineup. I'm going to jump straight into the charts, so I'm going to let the disclaimer roll and I'll see you soon. Welcome back, and starting with the US dollar to the South African Rand. Just before I start, I'd like to make you aware that there is some important headlines ahead for the week, and I can just point it out right here on my screen. So 2 of the G7 central banks are meeting this week, and also quite a lot of emerging market central banks. So I'm pretty sure this will also have quite a volatile impact on the market. So just keep that in mind. So looking at what happened during last week, we did indeed finally reach our full target of 16 Rand 50, and this is actually where we saw this large rejection followed by this very bullish green candle. And this also breaks the current downtrend with this candle closing above the 100 SMA on the daily time frame, and giving us opportunity for behavior. Now, as also pointed out on our video last week, my suspicion is that we will see this area retested, and this would be our area of, let's say, 17 Rand 90 to 18 Rand. So that area will most likely be retested during this week, and from there it's best to watch out for price action and see where price will take us from there. Just looking at the Fibonacci retracement for that level. So we'll see that this level also coincides with the 61.8 Fibonacci retracement level, as well as this previous diagonal area of which is now currently our area of resistance. So a lot of confluence areas converging on this area. So that would be the area that I would be looking out for the Rand in this week. Now looking at the Euro USD, we finally reached our full target as set out in our market overview video last week. That brought us way up to this, let's say, the 1.14 level, and that coincided with the monthly R3 pivot level from last month. And just looking at our Fibonacci retracement level from here, we can see that we do have quite a lot of areas of support going all the way down to the monthly pivot level, which is my current target, as that will also coincide with the 200 SMA on the daily time frame. And just to remind everybody that the target was calculated based on this triangular structure that we saw the previous few weeks, and we calculated that target based on the highs and lows of the base of this triangle target, and that is actually how we perfectly managed to target or calculate this target, which where we saw the resistance. We also saw that additional resistance was offered by this monthly R3 level, as well as the current R2 pivot resistance that we are seeing now. So just looking at this week, it's likely that we will see price move slightly lower, probably retesting at least the 1.112 level. That would be the 50% Fibonacci retracement area. That will also coincide with the 20 SMA on the daily, and any further pullback will bring us to this 1.10 area. This is the area that we also mentioned in our market overview video last week, and that will also be areas of resistance, all worthwhile looking out for, and look for price action on these levels. And just quickly looking at our economic calendar for the week. So a lot of events coming up. We can see that we still have the federal chair testifying. That would be on Tuesday. We have the core retail sales, as well as the usual employment change and unemployment rates on Thursday. There's some monetary policies and all kinds of other things also happening on Thursday. So definitely worthwhile keeping an eye out on these, especially for the times in question, as this will drive price action to a large extent on the levels. So that concludes our Euro USD. Looking at the GBP to USD, last week we saw a breakout above our 200 daily SMA into this area that we identified as our possible target area. Although we did see a rejection of this area, which would be a rejection of this 200 SMA, we are holding above the 100 SMA on the daily, which means the bullish move is still intact. And just looking at that lower shadow, we can see that also bounces off our 20 SMA on the daily. And then we can also see that the yearly pivot at 1.289, this is the area that I identified with the magenta line over here, is potentially still a viable target if we take that as a pullback and a potential second leg of this move. And we can just quickly do a measured move from that area. So that was our low. We take that low to the high and we just project that upwards. We can see that our full target remains in effect, although of course we are looking at a very strong yearly pivot area at this 1.289 area. I would first look at this as a potential strong area of overhead resistance, and also considering potential areas of support. We can see that our monthly pivot level is sitting at 1.233 level, so that would be the immediate area of support. I think this also coincides with a potential 61.8 Fibonacci retracement. So just looking at this move, we can see that yes, that area will coincide with our 61.8 Fibonacci retracement area. So that would be our levels of support and potential overhead resistance at 1.29. And should that break, we are still looking at very strong overhead resistance at this monthly R3 level, which coincides with the diagonal resistance area. Looking at the Australian dollar to the USD, we have reached our full target as set out on our market overview video last week, being the yearly pivot level and also very close to the monthly R3 level, all sitting on this 0.70 level. Price strongly rejected this level. I'm just going to hide some of these lines to make it more clear. Price strongly rejected this level, currently coming back down to retest this breakout. The breakout can be seen from this larger view in the diagonal. This is the purple line that we see coming across here. So this is the area we are currently retesting, and looking at our Fibonacci retracement that we drew from this monthly pivot level and also our previous swing low to the breakout or the full target level brings us to this 0.5 and to 0.618 area at the quite a coincidence, but yeah, the 0.618 Fibonacci retracement along with the 0.5 Fibonacci retracement area both sitting at about 0.674 to 0.678. So this is the area of support that we are currently testing, and that's also the breakout area that we saw on the 2nd of June. So if price were to be rejected from this area and we look at price going a bit higher, we might perhaps see price retest this weekly pivot level. And I'm just going to go down to the 4-hour time frame so that it can be seen more easily. We can see that our newly projected weekly pivot level is sitting on 0.69. So that would be, and that will also coincide with this 20 SMA on the 4 hours. So that will be our immediate area of overhead resistance, with the next area of resistance being our previous high, and that will also be our previous top of range at around 0.7 to let's just say 0.70. That would be our area of overhead resistance. Just going back to the daily time frame, we can see that looking at the areas of additional support, our 20 SMA on the daily as well as our new weekly R1 pivot is sitting on this 0.675 area. So that would be the areas to look out for, with even stronger support sitting on our monthly pivot level at 0.657. Now looking at the US 500. So for those of you who did watch our market overview video last week, you would notice that we called this area of 3,200 as a very strong area of overhead resistance and very unlikely to break higher. And it was quite interesting to see how the market did indeed reject this area very aggressively. And you can see that the reason being, well, firstly, that there's very strong horizontal resistance from previous the identified levels. We can also see that this coincides very nicely with this diagonal channel and just drawing this diagonal trend line from the previous highs. We can see that it perfectly met up with price. So we saw a quick consolidation in a very aggressive sell-off. Our sell-off did indeed go down to the 4-hour 200 SMA area, and that also coincides with the yearly pivot level, as well as, I believe, our daily and 400 200 SMA. So you can see the area currently sitting right on or retested at least our 200 SMA on the 4-hour, and going to the daily time frame, you'll see that 200 SMA is also sitting on this exact same level. So this is the reason why this is currently offering us very nice support. Just going back to the 4-hour time frame, I'd like to point out that there's quite a large lower shadow on this last candle from Friday, this 4-hour candle, and this tends to indicate that there is definitely buyers stepping in at this level. And it's likely that we might see a move higher early in the week. But let's just quickly look at our monthly pivot levels. So we can see that we are sitting with a monthly pivot level, the monthly R1 pivot level on this 3160 area. Just going to hide that so that you can see better. 3160 being around this area here. So that coincides also with the 50 SMA on the 4-hour. And I believe that would be a potential area of overhead resistance should price retrace a bit higher. But overall, I think it's likely that price will target a slightly lower level at the monthly pivot level. And I'll just quickly enable that back again. You can see our monthly pivot level is sitting just below us currently at 2,970. Just going to hide that again. So that would be around this area over here, just below the 200 SMA. And we are also looking at a very strong, let's say, buy zone or support area. And that is identified by this magenta line over here, because that will coincide with previous areas of overhead resistance, which now currently is an area of support. So should price move a bit lower, we will see this area acting as support. We are also looking at overhead resistance at our weekly pivot level, as well as a weekly S1 pivot level. And just enabling those, you'll see that there's our current weekly pivot level with the weekly R1 sitting at that area. And another reason why I'm saying this area should be an area of support is we're also sitting with the new weekly S1 support area in this 2,950 to 2,900 range as well. So lots of support in this area with near-term targets, the monthly pivot, and if price were to move through that, our weekly R1 being the next area of resistance. Now looking at Brent crude oil, just a quick note that on our previous market overview videos, we looked at our US oil, our US crude oil, and from now on we will be looking at Brent crude. So just be aware of that. And the reason we are doing this is because we have found that most of our subscribers and clients has requested that we look at Brent crude, as this is the instrument they prefer to trade. So a lot of traders very interested, I believe, in this gap close at the $45 area, and as we can see, that price did indeed, or unfortunately, let's say reject the this price area just before reaching the target. And if you were wondering what that might have been, it's worth noting that not only do we have the R1 monthly pivot at this 42 level, but we also have the larger and more important yearly S2 level. And I can actually show that to you quickly. Just looking at our yearly pivot levels, you'll see that the yearly S2 pivot level is also sitting in that area. So that both of those together actually make for quite a strong area of overhead resistance. We are still in an uptrend. Looking at the daily, we can see we are still quite nicely above the 20 SMA. So, and we have closed Friday above the 100 SMA on the daily time frame. So the bullish trend is still intact. I believe it's quite possible that we will see this gap being closed this week, or let's just say we hope that we will see this gap being closed. We can also see that the 200 SMA on the daily is also quite a little bit, or not too much, not too far above this gap area. So that might perhaps be a stretch target. So after this area is closed, we might perhaps see price push even slightly higher, perhaps to this monthly R2 area at 46 Rand 42, or perhaps slightly higher. But yeah, depending on your risk and to reward setups, I'd say you can either take profit if the market were to move higher. You can either take profit on this 44.95 to 45 level, $45 level, or perhaps a little bit higher on the 46 Rand 50 area. And just in the scenario where we see price perhaps break lower, we have our monthly pivot level on 33 Rand 75. So that would be an area of support. And that will also coincide if we just draw in this line over there. Blue. So we can see that just looking at the levels and this double bottom, this will also be an area of support. And projecting that double bottom upward will also give us an extended target should this retest hold closer towards that 200 SMA that we just mentioned. So look out for the 55.75 area of support, as that might be the level that price is looking to retest before moving higher to retest that gap, or close that gap and then perhaps move higher to retest the 200 SMA. Now looking at gold, we are currently looking at the daily time frame, and we can see that gold is still consolidating. We can see that looking at our monthly pivot levels, price has been consolidating between this R1 monthly pivot level from last month, which would also coincide with the yearly R2 area of resistance at 1737. So our yearly R2 pivot sitting at 1737. So looking at those top shadows, we can see that that's definitely an area gold is rejecting. And just to quickly show that to you on the chart, so it's weekly, yearly pivot levels. You can see there's our yearly R2 pivot level. Price really struggling to break through that. And just quickly looking at the 4-hour time frame, we have some good news, or potential good news. We can see that price is attempting to break through this short-term bearish channel that price has gold has found itself in over the last 2 weeks. And should this retest hold, we can expect price to just quickly re-enable our monthly pivot levels. Should price succeed to break through, we might even see our R1 level of monthly pivots being retested at 1771. And just looking at our new weekly targets, you can see we're sitting with R1 weekly pivot at 1756. So that would be the first area of overhead resistance should the price hold. But even more importantly, it's worth noting that both the 100 SMA as well as the 200 SMA on the 4-hour time frame are all converging along this area of our current weekly pivot, and that will also coincide with diagonal resistance. Rather diagonal support. So the area to really look out for would be this area in between that would be 1715 to about 1723. So that will be the area to look out for. Should we see bullish price action forming on this area, we could see our price move higher, and should it be rejected, we will see price move lower towards this 1690 area of support. Looking at Bitcoin, we can see that Bitcoin is also still consolidating like many of the other markets, currently also sitting between the R1 monthly pivot as well as the monthly pivot level, where it is now finding some support. And if we look at our 4-hour time frame, I'm just going to hide the monthly pivots, we can see that we are now creeping up along this wedge structures on the diagonal area of support. We have not broken below it yet. We are also finding some consolidation or support, and this is now just looking at the data from the weekend. We can see that price is consolidating on this 200 SMA area on the 4-hour, and just looking at our money flow index, it would appear that we are seeing some potential hidden bullish divergence, meaning that the potential move higher, and should price move higher, we can look out for this overhead area of resistance at 99820 to 99840. So that would be our area of resistance. So that would be price. If price were to bounce from here, we can expect price to find some resistance at this area. And should price break below this wedge structure, we should find our first support at the 9,100 level. So this would coincide with this horizontal level as indicated in blue, and that will also coincide with the low of the tail that was tagged on the 11th of June. So that could also be an area of some further support. And should price move lower, we could look at a very strong support on our, let's just go to our daily time frame. You can see that we have our daily 200 as well as our daily 100 SMA lines converging on this 8,150 level. So that would be a very strong area of support should price break out lower from the structure. Like I said, it does appear that there is some bullish divergence, and we can also see that in the daily. So we can see how price is making higher lows, but our MFI indicator is making lower lows. So that indicates some bullish divergence, and I would expect a move back up at least to this 9,840 level. And should price even move above that, our next area of resistance would be at 10,200. And of course, we then still have our overhead resistance with our diagonal wedge structure sitting at, that will be dynamic, but we can look at anything above 10,500 as additional resistance. Okay traders, that concludes our market overview for the week. I hope you enjoyed it, and also be aware that we recently launched our Masterclass series, and we have made our first video available completely free of charge. And if you missed it, you can find the link in the description below. Also, if you have not yet subscribed, please do so, and also remember to hit the notification button to be reminded as soon as our videos go live every Monday morning at 7 o'clock sharp. Until then, trade smart and trade successful.